Yes, you are correct. Distribution fee, it's an outflow, okay? Because when Job Boy sells these goods, don't know what product they're selling. When they sell it to their customers, they are the ones who deliver it to their customers. Now, it's fuel is not free. Fuel is not free, so they have to put an extra charge so that they can cover their fuel costs. Right? So this distribution fee is an out. Or could you just kindly mute your mic, madam? Then it tells us Joe Boy receives from the sales. Joe Boy receives 3% in the month of sale, and the remaining 1% in the month after. Okay, so when they make a sale in a certain month, they're only going to get 3% of that money in that actual month. Then 1% of that money, they're going to collect it in the next month. So we start with our tabulations. Okay, first things first, you have to know how much Jobo is going to make in terms of sales. So to find out how much you make in terms of sales, each of these units, you multiply them by 45 kwacha. 45 times 2,100, 45 kwacha times 2,400, 45 kwacha times 2,650, and 45 kwacha times 2,950. Okay, these are the sales values that we got. For those who are doing their own calculations, we can compare. Okay, this is how much Joboy will be receiving in sales. Okay, so remember this question, it told us we have to prepare a cash flow forecast for the months of January up to April. Okay, so first things first, you want to calculate the cash inflows. Okay, and we'll start with these 3% they receive in the month of sale and the remaining 1% in the month after the sale. All right. So for December sales, all right, December sales, how much was it? 90,000 kwacha. So they got 3% in December, and the remaining 1% they'll collect it in January. Okay. So the 1% of December sales will be collected in January. Then 3% of January sales is going to be collected in January. Okay. Because remember, 3% is collected in the actual month, then the other 1% is collected in the next month. So for January, for the sales for December, 1% of those sales is going to be collected in January, this 900 kwacha here. And then for January sales, 3% will be collected in the actual month of January, which is 3% of 94,500, which gives us 2,835. So in total, in January, we're going to collect 3,735 kwacha. Any questions before we move ahead? Okay, we move to February. So in February, all right, we're going to calculate 3% of the February sales, which is 3,240. Then we also have the 1%, which we need to collect for January. Okay, so we get 1% of 4,500, get 945 kwacha. 3,250 plus 945, you get 4,185. So that's how the process will be going here, right? When the month comes, you get 3% of the month sales. Then 1% of that month sales are going to be collected in the next month, like here in March, all right? The 1% from the February sales will be collected in March, and then 3% of March sales will also be collected in March. So in March, you have a total of 4,657.5 kwacha. And then finally in April, the 1% from the March sales will be collected, 1,192.5. And then 3% of April sales will be collected in April. So in total, you get 5,175 kwacha. That's how much will be collected in cash. So these, and in the question it says they are going to sell a truck. So these are the only cash inflows. And here where is this message about the truck? Yes. So the truck, they have a truck net value of 50,000. And they're going to sell it for 45,000 kwaj. So this is also a cash inflow that will be coming in. Okay, so which month is it? Here they said in the same month. So let's see, this was fixed. So it should be in March when the tractor will be sold. Because it's talk about when the interest payments are made. And the interest payments are made on a quarterly basis after every 3 months. So those will be your only cash inflows. The money that we're receiving from our sales and the sale of the truck. The rest are going to be cash outflows. And for the cash outflows, you can start with a distribution fee, 4% of the sales values. So January, 4% of its value, 3,780. February, 4% of its value, 4,320. March, 4% of its value, 4,770. April, 4% of sales value, 5,310. So this will be the distribution fees. Okay, the transport expense Job Boy is incurring when taking its goods to its customers. That's the first outflow, the distribution fees. The next outflow, salaries and bonuses. In the question, it tells us that the average salary per year, the average salary per employee is 22,000 kwacha per year. So you find out, okay, on a monthly basis, how much do they get paid? They get paid, so you do 72,000 divided by 12 months. They get each employee gets paid 6,000 per month. Now, in the question, they told us there are 25 employees. So, 25 times 6,000, 150,000. So, each month, Jobo is paying 150,000 in terms of salaries. Now, with these salaries, there's also a bonus attached. In the question, it stated that if they sell more than 2,000 units, there's a bonus of 40 kwacha per unit for each employee. Okay, so here this company is motivating its employees to be more productive. So in January, they produced 2,100 units. We're above the limit of 2,000, so we've made an extra 100 units. Okay, so each employee is going to be paid 40 kwacha per extra unit. Okay, so you're going to do these 100 extra units times 40 kwacha per unit. That's for one employee. Then you multiply by 25 to include all the 25 employees. So January's bonus is 100,000. So in total, Joe Boy is going to pay, in terms of bonuses and salaries, they're going to pay a total of 250,000. And you can imagine they're just collecting 3% of the sales. And if you can look at these bills that they're facing, February, 2,400 units were produced. So 400 extra units. So you say 400 times 40 kwacha per unit times 25 employees, you get 400,000. That's in terms of bonuses. Then when you add the salaries plus bonuses, you get 550,000. March, we made 2,650 units, so 650 above the threshold. So you're going to do 650 extra units times 40 kwacha per extra unit times 25 employees. In March, they're paying 650,000 in bonuses. And if you include the 150,000 salary, in total they pay 800,000 kwacha. April made 2,950 units. So 950 units are extra. You multiply that by 40 kwacha per extra unit. Multiply by 25 employees. In terms of bonuses, you get 950,000 kwacha. When you add the employee, I think the salaries, you get total of 1,100,000. So these are the for bonuses and salaries. Any questions? Variable expenses, they told us 35% of the sales value. So you just get the sales value for each month, multiply that by 35%. So for January, we get 33,075 kwacha. February, 35% of this amount, 37,800 kwacha. March, 35% of this amount, 41,737.5 kwacha. April, 35% of this amount, 46,462.5 kwacha. Fixed overheads, they are going to each month fixed overheads are 15,300. Right. 15,300. So each month you just say 15,300, 15,300, 15,300. Then our final cash outflow is the interest payments, right? They said got a loan of 1 million and the interest rate is 15%. They told us Jobo pays interest every 3 months on the loan. So they're paying it quarterly. Okay. Because when you break a year into four sections, it will be 3 months, 3 months, 3 months, 3 months to make a total of 12. So what we need to do is we find out how much they need to pay in interest. 15% of 1 million, 150,000. So now this 150,000, okay, it's going to be spread out in four portions. Okay. So we're going to divide it by four since interest is paid quarterly. 150,000 divided by 4, you get 37,500 kwacha. Right. So it pays every 3 months. So January, February, it pays in March. Okay. June, July, April, May, then it pays in June, and so on until you reach December. So this interest is going to be paid in March. So once you are done tabulating your cash inflows and outflows, okay, there are many ways you can present your table. Okay, this is not the only way you can present your table. There are many ways. All right. So you list your months and your opening balances. Then to your opening balances, you're going to add any cash inflows. Okay. You add the cash inflows to your opening balance. Okay. In my case here, I just added, then I subtracted these outflows and got my closing balance. All right. So there are two ways you can do this, colleagues. If you want, you can make an extra column here. Okay. You add the opening balance plus the cash inflow, you get a total amount. In that total amount, you start subtracting the expenses, the outflows. Okay. And then you get your closing balance. Colleagues, are we okay with that? Are we seeing how the closing balance is coming? Any inflow, you add. Outflows, you subtract from the opening balance. That's the tactic being used here. Okay, you have your opening balance, and if there are any inflows, add it to the opening balance. Add. Then any outflows, now subtract also from the opening balance. Yes. Any questions? Yes. So what you notice is for Job Boy, their balance just keeps increasing in the negative side. Okay. Because what we can notice is more money is going out than is coming in. So there was the next part of the question, which said, yes, please. Okay. All right. Let me help you out. So get your calculator. Negative 50,000 plus 3,735. What value do you get? Anybody with a calculator? Negative 50,000 plus 3,735. Forty-six. 46. Point. Negative 50,000. Okay. Negative 50,000 plus 3,735. Negative 46,000. Yes. Then after you get that negative 46,265, then you subtract now. You subtract it by negative 250,000. You subtract it by 250,000. Then you subtract it by 33,075. Then you subtract it by, oh, here, also this has to be negative. Here, this is a distribution fee. Subtract it by negative 3,780. Then you subtract it by negative 15,300. Madam, that was what I meant. That's how you get your final figure. Yes. Yes. If you want, you don't need to even get this total. You just say negative 50,000 plus this, minus this, minus this, minus this, minus this. Then you get your answer. Either way, yeah. So you're just going to see that the deficit keeps increasing for Job Boy Limited. So explain factors to be considered by Job Boy when planning ways to invest any cash surplus forecast by its budgets. This is now the room for open discussion. Basically, how can you help this company have a surplus which it can use to invest in new things? What can the company do so that that deficit there, which we're seeing, is no longer there? Yes, colleagues, what do you think Job Boy needs to do so that this deficit is no longer there? If you're the director of finance for a company, you've seen your cash flow forecast, you're seeing that your deficits are increasing each month, meaning you don't even have cash within the business. Okay, because all the money that's coming in basically is going to go out and you still be owing. So, colleagues, what should Job Boy do here? one thing they can do is the amount they receive, those that 3% and the 1% which they're collecting, they need to collect more. Okay, they need to collect more. At least if they can be collecting 70%, 80%, I believe those deficits will reduce and we might have even some remained. Okay, because the thing that we want is with our cash flow forecast is at least you have a car remainder with it for the business to use. So one thing they can do is those that 3% they collect and that 1% they collect in the next month, they need to increase those percentages. At least that way, the money that they'll be collecting can be enough to cover their outflows. What else can they do, colleagues? They can also increase their selling price. Okay, because let's see these figures are making. Yes, if you compare these figures that they're making here, still more, for example, if they were collecting all this money that month, I think they're still going to be in a deficit because you are seeing how much was going to salaries and bonuses. They are reaching the 1 millions, the hundreds of thousands. So either Joe Boy needs to also increase the selling price so that if they collect at least maybe even saying 70%, at least that money will be able to cover all the expenses. Okay. So this 45 kwacha per unit, they might need to increase it. Yes. Yes, is that a question? Mm-hmm. That's the downside. That's the trade-off they'll have to incur. Yes, it will reduce the number of customers. So what they can do, they say, okay, increasing the price reduced. Then the other thing they can do is increase the number of units they produce then. And those bonuses, I think they should reduce those bonuses. Okay. So yeah, that's a good point you raised, Mr. John. Yeah. If they increase the price, indeed, yeah. Because remember, for every action there will be a reaction. So if they increase the price, yeah, they should expect some buyers might go away. Okay. So the other option is increase the number of units you produce. Maybe if you bump it up to 20,000 units and you still keep the price at 45 kwacha, at least maybe there you're going to make a big amount. Okay. But even when they increase the number of units they produce, the bonuses have to go down. Now, colleagues, what would be the effect if they reduce the bonuses? What would be the side effect? Yes. Yeah, yes, because if they reduce the bonuses, you as a worker, you're not going to want to push yourself to make above, because there's no bonus. Okay? So these are the issues directors of finance go through. Okay, because not all solutions are going to give you the best outcomes. Okay, because even let's say, for example, if you start increasing the amount of money you collect, it means your credit sales are going to reduce because some people won't be able to comply with your strict credit terms. Okay, if you start telling your customers, okay, now we're having problems, so I think credit sales, I think we're going to lessen on the credit sales. You find you might lose customers. Okay? You try to increase your selling price, again, also, you're going to lose customers. Okay? You also try to increase productivity, well and good, but if you try to remove that bonus and salaries, you have a demotivated worker, and the worker is the heart of the business. So, who is it better to satisfy, the customer or the worker for a business? Who are you better off satisfying? Is it? Yes, it should be balanced. Try to balance it. But continue, yes, that's true. Try to balance it. Eh, they'll prefer the customer, yeah. The only downside is your machine to make those, your worker who you need to make the customer happy get discouraged. Yes. So we'll dive deeper into this part. Have to switch to the third years. So we can pause here. So then now the video is available. So when we meet next time, we will be dealing with the theory part of this assignment. Because